Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings and tell you what it really means for your money. Today we're diving into the latest report from Synergy CHC Corp, and it seems like they've been busy selling some stock. This report is all about a recent stock offering they completed back in August. Think of it as them printing new shares and selling them to investors to raise cash. Synergy CHC Corp is a company you might recognize if you follow the Nasdaq, trading under the ticker SNIR. They're in the business of, well, doing corporate stuff, but the big news here is how they're funding their future. The core of this filing is about a sales agreement they signed. Specifically on August 27, 2025, they sold a significant chunk of their company's stock. They sold 1,750,000 shares, that's a lot of ownership pieces, and they sold them at 2 cents a piece. This whole deal is called the offering. So the total cash they brought in before any fees was a cool $4.375 million. That's a pretty healthy amount of fresh money. Now, you don't get to keep all that money, of course. They had to pay out about 7% in fees to the investment banks, the underwriters who helped them sell the stock. That's roughly $300,000 in fees. So what are they doing with this money? The official word is for working capital and general corporate purposes. This basically means they need cash to keep the lights on, pay employees, buy supplies, or invest in new projects. It's a pretty standard answer for why companies raise money like this. They also mentioned they put out press releases about this. Those are often the cheerful public-facing announcements that translate the complex filing language into something easier to digest. Here's an interesting twist. Besides selling stock, they also gave out something called warrants. Think of these as options to buy stock in the future at a set price. They gave 52,500 warrants to the underwriters. These warrants can be used to buy shares at $2.75 each, at each 75 each. This is a bit higher than the price people paid in the main offering, which is a common way to incentivize the underwriters. And these warrants have a lockup period of 180 days, meaning the people who got them can't immediately sell them. This encourages them to hold on and hopefully see the stock price go up. These warrants don't last forever. They expire staggered over 3, 4, and 5 years. This gives the underwriters a longer term stake in the company's success. Putting this whole deal together cost them about $500,000 when you add up all the fees and other expenses. So out of the $4.375 million they raised, about $3.75 million is what they actually got to keep. If you're curious and want to read all the nitty-gritty details, the full prospectus is out there on the SEC's website. The underwriting agreement itself, which is the actual contract for selling the stock, is filed as an exhibit. And the form of the warrant agreement is also filed. These are the official documents that lay out all the terms and conditions of the deal. Finally, we see the signatures. Jack Ross, the Chief Executive Officer, signed off on this report. His signature on behalf of Synergy CHC Corp confirms the company is Saktiyed behind this filing. Behind this fight about what this all means, Synergy CHC Corp raised a decent amount of money by selling more of their company. This can be a good thing if they use the cash wisely to grow and improve their business. It shows they have a plan and are actively seeking the resources to execute it. However, selling stock also dilutes ownership for existing shareholders. This means each existing share now represents a smaller piece of the company. The fact that they had to raise money like this might suggest they don't have enough operating cash flow to fund their needs internally. The use of underwriters and the issuance of warrants are standard practices for these types of offerings. It's how these deals are structured to get the stock sold effectively. The key for investors now is to watch how Synergy CHC Corp deploys this new capital. Will it lead to increased revenue, profitability, or expansion? Or will it just be a temporary patch? The company's stock price will ultimately reflect how the market interprets these actions and their future prospects. A successful deployment of funds can lead to higher stock prices, while poor execution could lead to a decline. For now, it's a move to fund operations and future growth. Alright, that's our breakdown of Synergy CHC Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Let me know in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord community linked in the description for more insights and discussions. Thanks for watching. See you next time.